Strong jobs market and sluggish manufacturing leads to a confused market. The U.S. job market surprised analysts with an unexpected rise in new jobs, indicating a stronger labor market than anticipated. However, China's manufacturing and service sectors reported a greater slowdown than expected. The recently released Chicago Manufacturing Index painted a gloomier picture, revealing a more significant decline in manufacturing than initially projected. With a reading of 40.4 instead of the estimated 47, the contraction in the industry is deeper than anticipated. So, what does all of that mean? The job market isn't bad, but manufacturing is worse than expected. What gives? In my view, the Federal Reserve will be compelled to raise rates once again. Consequently, financials, particularly regional banks comprising the ETF, CRE, will face continued pressure. While some may assume that tech stocks would be negatively affected by further interest rate hikes, it's noteworthy that stocks within the ETF, XLF, have been defying the trend throughout the year. Although a pullback in this sector is possible, I don't believe it will be triggered by interest rate hikes. Looking at the chart below, it becomes apparent that the market has been uplifted by 5 stocks. Hence, we observe a decline in manufacturing but a rising stock market. Despite ongoing debates among politicians about the possibility of a recession, the job market remains strong, particularly in the services industries. Specific job sector insights will be unveiled with the upcoming reports scheduled for release on Friday. As we conclude the month of May, let's examine the performance of various sectors during the past month. This analysis emphasizes that the recent market movement lacks universality. So, which sector is likely to rise in the next month? By comparing the sector's performance over the last 3 months, we find minimal differences. I would suggest seeking bullish opportunities in stronger sectors and bearish opportunities in weaker sectors. If you're worried about the 5 previously mentioned stocks being overbought, but you're wondering about a bullish tech stock, look no further than Intel, INTC. On a weekly chart, I'm looking for a series of higher highs and higher lows to establish an uptrend. We have that here, but a cross above $34 would help solidify the upward momentum. Zooming out, we can see on a weekly time frame that INTC has been sliding since the start of the second quarter. If we can clear that $34 level, we could easily see this retrace back up to $40, $45, or even $50. There are so many ways that you could play this, depending on how bullish or bearish you are about a stock that was trading around $70 and is now in the low $30s. For more information on this trade idea and others like it, visit tradersreserve.com.